We're going to be hard pressed to break yesterday's record, but we'll see what happens. On the heat front, though, we're definitely breaking it. So, yay. Hope everybody's having a good day today. I shut a rig off yesterday. We'll talk about that. Boom. No commercial. Oh, you'll get an ad. Demonetized. I sure hope not yet. Not yet. Nah, we be good. We be good. We don't go that hard in the paint, do we? All right. Here, I'm going to click commercial and see if it works. You tell me. Oh, the dev call. Yeah, I keep running into the dev call live every single time. Definitely have to take a listen to it later. I guess I didn't hit that ad button, that insert ad button hard enough, did I? Because it didn't insert an ad, did it? Gandalf Gray, I'll add ADA hard fork to my list. Primarily focus on proof of work coins, you know. It is what I do over here. Huh. Good morning and welcome everybody to the Crypto Mining Show, your one-stop shop for all cryptocurrency news from the perspective of a cryptocurrency miner. I go by Blind Run in the interwebs and Matthew in real life. Today, we're going to be talking primarily a lot about mining and the impact of not only price, but the summer heat and all of that. We're also going to be talking about some inflation that was unexpectedly re-accelerated, which to me is like duh, but you know, we'll go over it and you know, proof in the pudding. I don't have to convince you guys that inflation is misrepresented right now. I just have to show you guys the actual facts surrounding it. We're also going to be talking about the anti-crypto letter because it was requested by a viewer that we cover the anti-crypto letter. It's pretty short, so we will cover it today, give you guys an idea of the opposing view for anti-crypto, or the opposing view of the letter we went over a couple days ago. We're also going to be talking about AMD's Radeon RX 7000 series, and their performance per watt is looking so good. As well as apparently we have 2022 to 2024 GPU roadmap confirmations from Radeon as well, which includes the Radeon RX 8000 series. So their roadmap is looking really, really good. And then before we get into all of that, just a disclaimer, I wanted to show you guys. So here's the front channel of, or the front page of my channel or whatever. This is, you can ignore, this is the stats through the little tube buddy thing. You can see we've had some pretty big dips lately. We're back up. We're back up. So thank you guys for helping me there. What is going on is that we have moved the crypto mining clips back over to here. I have not redone the Crypto Mining Show clips channel quite yet. We will be taking a look at that here in just a tad. Thanks for the $5 super sticker, RO2. The reason I want to show you guys this is that now we have moved clips back. The important note is you guys were asking for a way for you to distinguish between clips, especially if you watch the Crypto Mining Morning Show or the Crypto Mining Show, so that you don't end up watching dual content. The clips are noted with the episode number they are from. So at the very end of the clip, because we don't want to get in the way of the algorithm picking up the keywords, and we don't want it to get confused with an actual show. Basically, if it's a show, the number's at the beginning. If it's a clip from the show, the number from the show that it came from is at the end of the title, okay? That is how we're going to do it. Hopefully that works out just fine, and everybody is aware of basically how that will function. If it is going to be a dedicated piece of content, for example, tomorrow morning we have just some work being done at the farm. It'll be coming out at 9:45 a.m. Central tomorrow. That will be set as a premiere. So if you guys haven't noticed, I've been doing premieres for the dedicated content here recently. So to make that just extremely clear as to what is brand new content, you will basically see it pop as a premiere maybe a couple hours before the video is going to go live. And it will have like a waiting room with a live chat. That is not a live stream. That is a premiere. But I will be in there chatting with you guys in the live chat, getting your thoughts and feedback as we go through it, discussing mining topics, whatever it may be. So if it's set as a premiere, that's dedicated content. If at the end of the title, it has the number from the episode it came from, that is a clip. I'm doing my best to just accommodate everybody to the best of my ability. Also, Detroit Irish has been doing a great job at getting, of course, as many of the timestamps as he possibly can for the show. It's on me to make sure those get into the description, and I've fallen behind on getting uploads over on Spotify. I'm aware of that as well. So I'm trying, but I'm also trying to get this ship to float. And, you know, it feels like I keep kind of like I'm bobbing in some really, really choppy waters right now. Head goes under, pops out, goes under, pops out. So bear with me while I try to get through all this. We're going to make it all together. That's obviously the goal. So without further ado, let's get into the ad and get into the show for today. I do have to end sharp at 10:45 because I do have a meeting at 11 a.m. and they have jiu-jitsu. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. Bam! And welcome back, everybody. First news topic of the day. This is exciting. AMD's next generation RDNA 3 GPUs, that's going to be the RX 7000 series, which should be launching near the end of the year here, hopefully like Q3, Q4 of 2022, is bringing more than 50% performance per watt over RDNA 2. Why is this more exciting than the RX 4000 series? Well, the RTX 4000 series, or Ada Lovelace. To me, it's way more exciting because we're talking about performance per watt. We're talking about performance, more performance, less power. And as you guys know, may your hash rates be high and your watts low. This is what I like to see when I'm looking at new tech from, of course, the mining perspective. And so when we take a look at this, obviously that's a lot better than saying, oh, your power consumption is going to go way up, but you're going to get more power, which is what's happening with RTX 4000 series and Ada Lovelace. So this is the first time we've seen kind of that metrics of performance per watt. And I think AMD is making a very smart move in presenting it this way. Let's see how true it is. Let's see what the memory bandwidth is going to be. As we discussed before, they are upping the bus width on the top end models to 384-bit. President of Engineering Radeon Technologies Group, David Wang, said that the next gen GPUs for RX 7000 series will offer over 50% performance per watt uplift versus the existing RDNA 2 GPUs. Some of the key features of RDNA 3 GPUs highlighted by AMD will include a 5nm process node. Remember, NVIDIA in this realm is getting a 4nm process node, but it's technically just a modified version of the 5nm process node. So I think technically from the process node standpoint, NVIDIA is technically ahead on the core here. Advanced chiplet packaging, which I think AMD is way ahead on. We've talked about that with their multi-chip module design, re-architected compute unit, optimized graphics pipeline, next-gen AMD Infinity Cache, which we also know that for whatever reason, NVIDIA did decide to start pushing more L2 cache on their GPUs. So AMD's already been doing this with their Infinity Cache on the RX 6000 series. They're just a step ahead in a couple key areas. One is this Infinity Cache, more cache on GPUs. One of it is obviously the multi-chip module designs. This is where AMD is really shining. And they say a greater than 50% performance per watt versus RDNA 2. Here's the slide that they showed, which is interesting, right? In the information published by AMD, the company highlighted a few key features of its RDNA 3 GPUs that will power the next generation of RX graphics cards. The RDNA 3 GPU will be based on a 5nm process node and utilize an advanced chiplet packaging that delivers increased performance per watt. Furthermore, the GPU will house a range of new technologies such as brand new and re-architected compute unit, an optimized graphics pipeline, and the next gen of Infinity Cache. So that's pretty exciting stuff in my opinion. The AMD Navi 31 GPU, the flagship RDNA 3 chip, would power the next gen enthusiast cards such as the RX 7900 XT graphics cards. We have heard that AMD will drop compute units in favor of workgroup processors on its next-gen RDNA 3 GPUs. Each workgroup processor will house dual compute units, but with twice the SIMD 32 clusters as opposed to just 2 on each compute unit with RDNA 2. Rumors are that AMD has the option to select between Samsung and TSMC for the 6nm die. I think they mean 5nm. But maybe they go down to 6nm for the low end. Let's get into more details and see if we can figure it out in this article. According to the latest information, the AMD Navi 31 GPU with RDNA 3 architecture is expected to offer a single GCD with 48 workgroup processors, 12 SAs, and 6 SEs. This will give out a total of 12,288 stream processors, which is lower than the previous count. This will also drop the overall compute performance unless AMD goes crazy with over 3 GHz clock frequencies on its flagship part. The Navi 31 GPU will also carry 6 multi-core dies, I believe MCDs, right? Or was that multi-cache dies? That's it, right? Which will feature 64 megabytes of Infinity Cache per die and are also likely to carry the 64-bit memory controllers that will provide the chip with a 384-bit bus interface. Ooh, ooh, ooh. That's what we want to see. Lower power and a bigger bus, boys. That's what I want to see. No! I clicked there we go. We're fine. I got too excited. I got all excited over here. The Navi 31 MCDs will be linked to a single GCD via a next generation Infinity Fabric interconnect and feature 250 to 384 megabytes of Infinity Cache. That's way higher than the 90 something, was it 96 on NVIDIA for L2 cache? Of course, this cache operates a little bit differently. Considering the latest memory design, next generation Navi 31 GPUs can be equipped with up to 24 gigabytes of VRAM, the same memory capacity as the upcoming and existing flagship from NVIDIA, the 3090 and the 4090. The newer memory spec can be seen as a reduction over the previous rumored 32 gigabytes of memory, but it's definitely going to help tone down the pricing of the card and have parity with NVIDIA, while Infinity Cache is in play can deliver competitive performance in higher resolution gaming, which we've seen to be true on the 6000 series, right? The AMD Navi 32 GPU is also one of the 2 MCM multi-chip module GPUs featured in the RDNA 3 lineup. The GPU will feature a single GCD, which is your graphics compute dies, and 4 multi-cache dies. The die is very similar to the flagship Navi 31 GPU, but has one less shader engine across each die, or SE. The AMD Navi 32 GCD expected to utilize TSMC's 5nm process node, while the MCD will be based on a 6nm process node. There you go. So your GCD, so your graphics compute dies, will be on 5nm, and your cache dies will be on 6nm. The GCD will be equipped with 4 shader engines, and each shader engine has 2 shader arrays, 4 in total. Each shader array is composed of 4 workgroup processors, 8 per shader engine and 32 in total. And each workgroup processor features 8 SIMD32 units with 32 ALUs. And so that is basically 128 in total. These SIMD32 units combine to make up 8,192 cores in total. The Navi 32 MCDs will be linked to the GCD via a next generation Infinity Fabric interconnect and feature a rumored 256 megabytes of Infinity cache. Each MCD should also feature 2 memory connect links, 32-bit. That's a total of 8 32-bit memory controllers for a 256-bit bus interface. And so your lower end models, the E32 will still be a pretty large bus. The graphics chip should provide up to 16 gigabytes of GDDR6 memory, the same amount as the existing Navi 21 GPUs, but 33% higher memory capacity than the Navi 22 GPUs. This would bring the performance of the RX 7700 series above the 6800 and 6900 series, offering one big leap in graphics horsepower in games. This would also pump the power numbers, as the 6700 is currently 230 watts, but that could go up to 270 to 300 watts. So there is still a power increase going on there on the 7700, probably also, of course, the 78 and 7900s. We'll get a spec sheet probably down here in just a second. As for the specifications, if Navi 33 is similar to Navi 21, then we can expect a total of 80 compute units, which will pack a total of 5,120 stream processors. If AMD keeps the per CU core count to 64 SPs as the existing chips. Now, what's interesting is that a previous rumor had hinted that the Navi 31 was also going to feature 80 compute units, but would be based on the new RDNA 3 IP. It seems like the 80 CU or compute unit rumor could also be true, but that wouldn't be the full specifications the chip will offer. AMD Navi 31 chips will end up with a multi-chip module solution and feature dual 80 compute unit chiplet dies, and would feature 5,120 cores. This would round up to a maximum of 160 compute units and a total of 10,240 stream processors. If that ends up being the case, and it looks more so than ever it would be, then we can definitely expect an 80 CU Navi 33 part. The Navi 32 SKU could end up with around 120 to 140 CUs, and that too could be a multi-chip module design. This would make up for a very hefty GPU design, and we can also expect it to be based on a brand new process node such as TSMC's 5nm. AMD has already patented an active bridge chiplet solution for its next generation GPUs, which comes with an integrated cache and interconnects the multiple dies featured on the Navi 3 GPUs. You can read more about that here. So you have Navi 33, 32, and 31. The question, obviously, so 7900 XT, 7800 XT, and then we get into basically for us the memory. This is going to be, I think, the first time in a while, well, actually ever, definitely with the new architecture, where you have a memory performance increase from the 78 or the 800 to the 900, right? So on the 6800 XT to the 6900 XT, you really had the same amount of memory, the 256-bit bus. They upgraded, obviously, the bus size on the 7900 XT, which is going to make it more appealing. The power consumption on these is assumed to be 300 watts on the 7800 XT and 400 watts on the 7900 XT. Given that we probably won't see any implementation of Infinity Cache really taking over here, and probably just a slight bump in, of course, the memory speeds. I think we are getting new, faster GDDR6. Last I had checked. That does mean we probably still are only looking at somewhere on the 7800 XT around 70 mega hash per second or something around there. As far as the calculations on the 7900 XT, we could start seeing somewhere closer to that 100 mega hash range, depending on the speed of the GDDR6 and how much faster it is. I think by all accounts, it's possible that it gets up to 21 gigabits per second, which would give us like 120 mega hash a second. It's really yet to be seen, I think, as far as that goes, because I'm not sure exactly what the refresh of GDDR6 is going to be, but these could end up being fantastic across the board, right? For basically power consumption. You really wouldn't be that far off. And the great news, obviously, with AMD is you get a lot more, typically, especially on Linux, a lot more voltage control over your cores and all of that. Yes, it takes you more time to set up, but I'm thinking as far as mining goes, the 7000 series is looking worlds better than the 4000 series from NVIDIA, at least right now. We also have more roadmap information from AMD. They are confirming their next-gen RDNA 4 already for the RX 8000 series GPUs and their Instinct MI300 APUs, and it's supposed to come by 2024. So AMD has confirmed its next-generation RDNA 4 RX 8000 series gaming GPUs and CDNA 3 Instinct MI300 data center APUs in its latest roadmap. While AMD has revealed the first details of its next-generation RDNA 3 GPUs, they also revealed the generation of gaming GPUs that comes after that. And surprise, surprise, it's called RDNA 4. The new Navi 4X lineup is expected to launch in 2024 and will be based on an advanced process node. For its CPU lineup, AMD has announced both 4 nanometer and 3 nanometer, so it could be any of those nodes. But I would place my bets on 4 nanometer node due to its maturity and the fact that it also matches the naming scheme, which will make for some good marketing. AMD didn't share the numbers, but we at least know that RDNA 4 is a real thing and comes after RDNA 3. So we don't have any real numbers at all right now. Nothing to really talk about. They do go into more information kind of what we just covered with RDNA 3. So I'm not really going to pop into that. We should see a new process node and get more information coming from that later. Let's see on the MI300 APU though, David Wang also announced the compute GPU roadmap, which includes Instinct class chips for the AI and data center segment. It can now be confirmed that AMD is indeed working on a multi-chip and multi-IP Instinct accelerator, which not only features the next generation of CDNA 3 cores, but also is equipped with the next generation Zen 4 CPU cores. The Instinct MI300 GPU, technically an APU, is scheduled to launch by 2023. It'll be using the 5 nanometer process node. The chip will be outfitted with the next generation of Infinity Cache and feature 4th gen Infinity architecture, which enables CXL 3.0 ecosystem. The MI300 accelerator will rock a unified memory APU architecture and new math formats, allowing for 5 times performance per watt uplift over CDNA 2, which is massive. AMD is also projecting 8 times the AI performance versus the CDNA 2 based Instinct MI250X accelerators. The CDNA 3 GPU's UMAA will connect the CPU and GPU to a unified HBM memory package, eliminating redundant memory copies while delivering a low TCO. So there you go. Obviously, those data center solutions are extremely interesting, but never really make it to us at the end of the day, which is fair. So it was requested that I cover the anti-crypto letter. We're going to get into it right now, and then we're going to be talking a little bit more about, obviously, mining and what's going on with that. But here's all the sources. They have an article from Bloomberg talking about 5,200% surge in U.S. giving. Tax experts urge Washington to resist crypto industry. Crypto has a new foe in Washington. The techies, tech experts urge Congress to resist crypto lobbying. And technologists craft an open letter to the U.S. lawmakers urging them to responsibly legislate crypto industry. So This is a letter in support of responsible financial tech or fintech policy. Just wanted to say financial tech because someone was asking me what fintech meant the other day. So that's basically technology in relation to finances. And it is to all the same people the rebuttal was to. So Charles E. Schumer, Mitch McConnell, Nancy Pelosi, Kevin McCarthy, Debbie Stabenow, John Boozman, Sherrod Brown, Patrick Toomey, Ron Wyden, Mike Crappa. I'm just going to leave it, bro. Maxine Waters and Patrick McHenry. Dear U.S. Congressional Leadership Committee chairs and ranking members, we are 1,500 computer scientists, software engineers, and technologists. So you don't represent the people. You represent big tech, good sir. Screw those peasants that need crypto. Who have spent decades working in the fields producing innovative and effective products for a variety of applications in the fields of database technology, open source software, cryptography, and financial technology applications. We really like the centralized control of this because then we can make our pockets fatter, good sir. Today we write you urging you to take a critical, skeptical approach towards industry claims that crypto assets, sometimes called cryptocurrencies, crypto tokens, or Web3, okay, they're just going all over the place. I feel like if you're a technologist, you understand that Web3 can exist outside of cryptocurrencies. I mean, not outside of blockchain, but okay. Anyways, let's get into it. Are an innovative technology that is unresolvably good. We urge you to resist pressure from digital asset industry financiers, lobbyists, and boosters to create a regulatory safe haven for these risky, flawed, and unproven digital financial instruments, to instead take an approach that protects the public interest and ensures technology is deployed in a genuine service to the needs of ordinary citizens. You know, if you write this and then ordinary citizens are like, no, actually, like it was helping us, you're obviously, you're detached from reality, I think. We strongly disagree with the narrative peddled by those with a financial stake in the crypto asset industry that these technologies represent of positive financial innovation, and are in a way suited to solving the financial problems facing ordinary Americans. Well, here's the deal. It kind of just offers a solution to future problems for ordinary Americans, not current ones, at least to the perspective of the fact is where we're seeing it applied, right, was Venezuela, Ukraine, countries that are in areas that have experienced either some sort of wartime effort or hyperinflation, right? So the idea isn't necessarily just for Americans, right? Like that's the problem here. Not all innovation is unqualifiedly good. Not everything that we can build should be built. The history of technology is full of dead ends, false starts, and wrong turns. Append-only digital ledgers are now a new innovation. They have been known since 1980 for rather limited functions. As software engineers and technologists with deep expertise in our fields, we dispute the claims made in recent years about the novelty and potential of blockchain technology. Blockchain technology cannot and will not have transaction reversal or data privacy mechanisms because they are antithetical, I did say it right, to its base design. Well, okay. So first point on that one would be they're saying that transaction reversal is not possible. Yeah, you could probably do something on layer 2 or layer 3, definitely on layer 3 with it. So I think you could do transaction reversals, but the entire point is to not have transaction reversals, right? And then if we talk about privacy mechanisms, well, then we start talking about building a blockchain from the ground up, something like Zcash or Monero, etc., for the privacy-based designs. So yes, as far as Bitcoin goes, it's an open ledger. It is supposed to be that way. But if we go deeper into other blockchain technologies, I think that it's possible. I may not know though, because I am not on the level of, well, at least what these guys claim as far as their technological prowess, right? So financial technologies that serve the public must always have mechanisms for fraud mitigation and allow human in the loop to reverse transactions. Blockchain permits neither. I disagree, good sir. I do not think that you need mitigations for those, but that's my personal opinion. And I also think that you can have that with, like I said, layer 3 solutions. But its very design, blockchain technology, is poorly suited for just about every purpose currently touted as a present or potential source of public benefit. From its inception, this technology has been a solution in search of a problem and has now latched onto concepts such as financial inclusion and data transparency to justify its existence, despite far better solutions to these issues already in use. I would like to see those to be presented. Hopefully they do. Despite more than 13 years of development, it has severe limitations and design flaws that preclude almost all applications that deal with public customer data and regulated financial transactions, and are not an improvement on existing non-blockchain solutions. Yeah, they're not an improvement on non-blockchain solutions because they are not supposed to be like non-blockchain solutions. They're supposed to be completely separate, right? A complete reinvention of the wheel. Finally, blockchain technologies facilitate few, if any, real economy uses. On the other hand, the underlying crypto assets have been the vehicle for unsound and highly volatile speculative investment schemes that are being actively promoted to retail investors who may be unable to understand their nature and risk. Other significant externalities include threats to national security through money laundering and ransomware attacks, financial stability risks from high price volatility, speculation, and susceptibility to run risk. Massive climate emissions from the proof of work technology, of course they were going to bring that up, utilized by some of the most widely traded crypto assets, and investor risk from large-scale scams and other criminal financial activities. So when we get into ransomware, that is a huge problem, but that is going to be a huge problem regardless of cryptocurrency, in my humble opinion, and that's the sector I used to work in as well. Getting crypto jacked, where essentially you end up with an entire server that gets all of the files locked and then held ransom for payment that was typically done in cryptocurrency. So that may be Bitcoin, Monero, whatever the attacker decides to request the payment in. And that's been something that's been going on since the inception of cryptocurrency, but it was going on before then as well. They just used different ways to receive their funds, right? So I guess it does enable that to be more easily accessible. I agree. I think that comes down to obviously like your OPSEC and who is controlling and who is basically providing security for whatever company you're functioning with. Obviously, like simple solutions to that are daily backups or even hourly backups that are running that you can fastly recover from after you've secured your network, that sort of thing. These are some typical strategies that we put in place or that I've been a part of, where, it gets crypto jacked, you find the security hole, you plug that up, you recover from a backup. And frankly, due to the improvements in technology and computing, you can be back up within a business day, right? If you have your ducks in a row. And I think like mitigating security risks like that are going to have to be done regardless of cryptocurrency. Just my personal thoughts on it. We implore you to take a truly responsible approach to technological innovation and ensure that individuals in the US and elsewhere are not left vulnerable to predatory finance, fraud, and systemic economic risk in the name of technological potential, which does not exist. I think it does exist. So they keep telling us that it doesn't exist, but then we've seen proof of it existing. And then to compound on top of that, they aren't giving us the examples of the current structures that are in place that offer these things. So it's a little frustrating. The catastrophes and externalities related to blockchain technologies and crypto asset investment are neither isolated nor are they growing pains for a nascent technology. They are the inevitable outcomes of a technology that is not built for a purpose and will remain forever unsuitable as a foundation for large-scale economic activity. Well, part of the theory is that you dissolve the large-scale economic financial activity and you go down to smaller-scale financial activity. and you enable smaller farmers to be able to transact more easily, direct with consumer without a third party interfering between them and imposing a ton of regulations that make it impossible for them to actually function, which then allows them to create better foods and then transact directly with the public without the interference of, you know, Bill Gates buying up 60% of the farmland in the United States. I said it. Given these vast externalities together with the at best still ambiguous and at worst non-existent uses of blockchain, we recommend that the community look beyond the hype and bluster of the crypto industry and understand not only its inherent flaws and extraordinary defects, but also the litany of technological fallacies it is built upon. Once again, can you cite these, please? We need to act now to protect investors and the global financial marketplace from the severe risks posed by crypto assets and must not be distracted by technical obfuscations which mask an abject lack of technological utility. We thank you for your leadership on financial technology and regulation and urge you to consider our objective and independent expert judgments to guide your legislative priorities. We remain happy to discuss at any time. Here are all the signatures. Let's see if we notice anybody huge. Interesting here. Here. Oh. Tons of signatories that we'd have to scroll through all of them, I guess. Got some guys from Google, Puget, Google, MIT, Alex Gu, Google, Alex Hong. This could go on for 1,500 signatures. So we didn't do it for the previous one. We won't do it for now. All right. So there it is. That is the anti-crypto letter. I'd like to hear your thoughts and opinions on it. Bitsby Trippin has a video coming out today, I believe, that will be covering this more in depth. I just wanted to make you guys aware that he did do a tweet. And this tweet is kind of in response to the article we talked about at the end of the show yesterday with Red Panda Mining covered on his channel, specifically discussing, of course, the pricing of cryptocurrency and its relevance, I suppose, as far as all others for mining, and if ETH is, you know, if post-merge and mining with GPUs is viable. What Bitsby Trippin came out with here is he said, based on what the existing output of ETH daily mining payouts is versus GPU networks, this is purely on a crypto price versus its network yield, block time, and block reward comparison, and many more factors will play. Of course, he's correct, but the current price is what he has listed. If replacing Ethereum 100%, what the price of that currency needs to hit, the increased percentage, block reward, daily blocks, daily review, and full unit per day. This is a great chart. So huge shout out to Bitsby Trippin. Follow the link in the description below to follow him on Twitter. Make sure you go then to his Twitter profile, find his YouTube. He should have a video covering this in more depth today. What we have learned, obviously, is that you would have to have some pretty crazy price discovery. The lowest price discovery would be on Ethereum Classic, which only needs an increase of 5,059%, which, you know, sounds like a ton, but it's a lot better than some of the others. So for Ethereum Classic, at least by his math, that would be the number one or the easiest one to, or the least amount of increase needed, and that would have to go to $1,100. Not dissimilar, of course, from Ethereum as far as pricing goes, just a little less due to its block reward being a little bit higher. Of course, that doesn't include fees and other things that could play a part if the network started being utilized at that level. For Ravencoin, you would have a 20,000% increase, 20,151% increase, and that would end up needing to be around $5.63 per Ravencoin, and that's due to its high, of course, block reward at 2,500. Then you have Flux, which would need to go up to $775, and that increase would need to be 119,000%. That's according to Bits. Ergo would have to go to 427, which would actually be second place at a 17,000% increase. So I guess really you would put, you would really want to put Ergo, I think, second on this list, Ravencoin third, Flux, or then you would put Conflux at fourth because it would need to go to $58 and 74,000%. Now, what this doesn't include is a distribution of miners, right? So this would be if miners needed to essentially only move to one coin. So all of the miners from Ethereum moving to Ethereum Classic. What it doesn't include is all of the miners evenly splitting across all of these networks, right? So if all of the miners split between multiple networks, like let's say Flux, Ergo, and Ethereum Classic and Ravencoin, or just all of them, right? Then the requirement for their increase in percentage would go down, essentially. But I wanted to bring this to y'all's attention. Make sure that you guys go subscribe to Mr. Bitsby Trippin'. He is the OG in the crypto mining space, especially on YouTube. So definitely go take that into account. Inflation unexpectedly reaccelerated to 8.6% in May, hitting a fresh 4-decade high. Oof. Bitcoin dipped about $500 on the news, trading around 29,500 US dollars, just down to 29,354 as we speak. In the minutes following the report, the consumer price index, the most widely tracked benchmark for inflation, rose 8.6% on year-over-year basis in May, topping expectations that it would decline to 8.2% from April's 8.3%. The core CPI, which strips out food and energy costs, rose 6% year over year in May, dipping from April's 6.2%, but more than expectations for 5.9%. On a monthly basis, the CPI rose 1% in May, ahead of expectations for gain of 0.7% and more than tripling from April's 0.3% advance. The core rate rose 0.6% in May, flat from April, but higher than expectations for 0.5%. The unexpected fresh 4-decade high of 8.6% in the headline inflation is problematic for monetary policymakers who are in the middle of a rate hike cycle, but may have been eyeing a pause at some point later this year. Now, the question may be whether the Fed needs to raise rates by 75 basis points per meeting rather than the planned 50 basis points. Bitcoin, which along with nearly all assets has taken a major hit as Western central banks have begun tightening monetary policy over the past few months, has dipped from 29,500 to 29,500 from 30,000 in minutes after the report. It remains off by about 65% from its all-time high and hit the fourth quarter of that it hit in the fourth quarter of 2021. The interesting point here, that though obviously, is like this isn't a big hit to Bitcoin. The markets seem to be getting hit harder, obviously. So it's a little interesting. I would expect it to go up at some point. We've had this conversation, but for now it is following a little bit more like traditional markets. Quote, there are certainly positive signs that would indicate the worst on inflation is behind us, end quote, said Jonathan Silver, founder and CEO of Affinity Solutions, a global insights firm tracking consumer purchasing habits. The job market remains strong, which is putting money in people's pockets. However, price increases are still outpacing people's paychecks. Hopefully, this trend will reverse itself as inflation reaches its peak and begins to dissipate. Our purchase spending data suggests that this is the direction we are headed, he said. This morning's inflation report is the last major economic indicator that the Federal Reserve sees before its next meeting on June 14th to 15th. At which the central bank is widely expected to raise its benchmark federal funds rate by another 50 basis points in what would be the third rate hike this year. Federal Reserve Bank of Atlanta President Raphael Bostic in late May hinted at the possibility of pausing rate hikes in September if inflation moves in the right direction, which obviously clearly it's not. That was seemingly shot down by Fed Vice Chair Lyle Brainerd days later, who said it's very hard to see the case for any pause in tightening cycle. Quote, if we do begin to see reduction in the CPI numbers as expected, I do think we will see that reflect well within all markets, signaling that the tide is beginning to flow in the correct direction and we should see some more risk on investment come back to the markets, with both Bitcoin and total markets seeing some increased volumes and price action, end quote. Howard Greenberg, cryptocurrency educator at Prosper Trading Academy, said a negative number would cause a much bigger downside event than the expected, or even a slightly better than expected number as has to the upside. Essentially, at the end of the day, like, obviously we talk about cryptocurrency, specifically Bitcoin, as a hedge against inflation. And it's really hard for me to really parse out the data, because this is not something that I'm not a financial expert or anything like that. So what I do see, though, is Bitcoin holding a lot stronger than a lot of other assets, and really has not dumped down to what I would have expected for a typical super cycle. And that, compounded with the fact that we are seeing record high inflation and obviously all these issues within the economy and the world in general, Bitcoin doesn't look as bad as I would expect it to look right now. So I don't know. Like, that could be good news for the next super cycle. Miners in Texas, though, have been powering down amid heat wave and record electricity demands. I powered down a rig yesterday. We'll talk about that in a second. Due to high temperatures in Texas this week, energy demand sets a new record high for the month of June. For some Bitcoin mining companies, this means more off time as the state's grid operator signals peak times pricing go up. High temperatures in Texas this week have led to a record-breaking power use levels for the month of June, presenting a test for state's power grid. And the heat wave has had implications for some of Texas Bitcoin mining operations. Energy demand hit a peak of 72,386 megawatts on Monday, setting a record for June, only to be surpassed the following day when demand hit 72,785 megawatts, according to data from the Electricity Reliability Council of Texas, ERCOT. The all-time record was 70,257 megawatts on June 23rd of 2021. An influx of Bitcoin miners into the state has raised questions about the potential consequences for its grid. Quote, ERCOT expects sufficient generation to meet forecasted demand, end quote, ERCOT told The Block via an email Thursday. Many Bitcoin miners in the state have set agreements with ERCOT to power down at peak energy demand times. Advocates say this kind of flexibility can be an asset to the grid. BitDeer said that while this week's record-breaking temperatures were unusual, the company would respond as it normally does when demand goes up. The company curbs power during times of peak demand on the grid, and when electricity prices get too high, it responds to signals from the retail electric provider, ERCOT traders, and power consultants. Quote, we curtailed operations on June 7th during the late afternoon and will continue to do so when monitoring usage on the grid as well as rising temperatures, end quote, a BitDeer spokesperson said via an email. We powered down by using automated software triggers when power costs reach certain price points, they added. Bitcoin miner Argo said earlier this week that it had mined 25% less Bitcoin in May for a variety of reasons, one of them being the time it had to shut off power due to higher temperatures. Quote, that was probably worth about 5 Bitcoin in terms of higher temperatures, end quote, Argo CEO Peter Wall said in a video posted Tuesday. Quote, we voluntarily curtailed a couple times. Energy prices went up. We gave that power back to the grid, and that happened on a couple of occasions. Riot has recently indicated that it would also likely be curtailing operations this week as temperatures went up. Next week, they're predicting 100 degrees, 5 days of 100 degrees. We will turn out power off, and during that time, that power that we're not using can be used in the grid itself so that it can support 200,000 or 300,000 homes in and around our community, said Chad Harris, Riot's chief commercial officer, on May 31st in a video the company recently published. We already know, we're already setting up, we're already checking everything. Harris was speaking at the company's Whinstone facility, which is expected to reach a total capacity of 750 megawatts when fully built out. Now, it's not going to get much better because we're already at 104 degrees for today. We're really not in the mid of summer. We're in June. And in Texas, we still have July and August to get through. And we got some time to really before this problem kind of goes away. Coming up with a good strategy for these large facilities is going to be extremely interesting. Obviously, as a smaller miner in Texas, I pay attention to it. It doesn't affect me as much because I don't have quite the power that these kind of guys do. But I have shut off a rig. That was primarily due to a power supply failing due to heat. And then I'm just leaving it off because I have a new solution coming in. So we left that rig off. It's pretty crazy out here right now, though, for heat. And obviously power costs are going up for a lot of people. We had that weird charge that I covered this month that was due to the winter storms from a long time ago. Apparently a catch up from them, which I haven't even been with this particular company since then. So I have to call them and kind of try to fight that a little bit personally, because that put our margins down to like, I think we only made like $140 for last month on mining, which is pretty awful. I'd like to hear from you guys that are in Texas and what you're experiencing with it as well, because I find it kind of like a super relevant topic surrounding cryptocurrency. I know that some companies have like a deal with their power companies in Texas that when they shut off, they make more money, or they get a portion of that power back. I think you have to be pretty large for that. And then I know that there are some areas where you can basically have higher prices during peak time. So you turn off the miners during that time and then cycle them back on. So there's lots of different ways that people are handling this. I'm going to be trying to work on like, I need to talk to like some of the bigger miners to get an idea of what they're doing and figure that out. Obviously there's also the flare gas solution that a lot of miners are using, which basically acts as a battery backup for that as well. So there's lots of different ways in which this is being handled, but it is making it extremely more difficult than when we saw a majority of the hash rate in, of course, China with cooler temperatures. So it's fun. Bitcoin miners will see a 29% rate hike on hydroelectric power in Washington. Charging Bitcoin miners the highest rate wasn't enough. Shelton County now has implemented a new crypto rate that's 29% higher. So it's like, okay, well, Texas is having all these heat issues, but at least they aren't doing a 30% rate hike on you, right? The promise of cheap hydroelectric power for Bitcoin miners in Washington state has started to fade. A 29% rate hike for hydroelectric power in Shelton County, created specifically for cryptocurrency miners, went into effect on June 1st. The miners used to pay a lower high-density load rate for their electricity. Now they'll pay newly created cryptocurrency rate known as Rate 36. Quote, what we did as a commission and what we did as a utility was industry leading to create new rate for this type of demand, end quote. Gary Arsenault, a Shelton County Public Utility District Commissioner, told local news outlet KPQ. I mean, at the basis of this, isn't this some sort of discrimination towards miners? Like you hike the rates? It's weird. If you hike the rates for cryptocurrency miners, you have to hike the rates for data centers. That's my opinion. Washington state accounted for about 2/3 of all hydroelectric power generated in the U.S. in 2020, according to Energy Information Administration. The state's Grand Coulee Dam, located on the Columbia River in Grant and Okanogan counties, powers 6,809 megawatt. The cheap and renewable hydropower has made Washington state a popular destination for Bitcoin miners too. Washington state accounts for 4% of the total U.S. hash rate in December, according to the Cambridge Center for Alternative Finance. Hash rate is a measure of total computer power on a blockchain. Each hash represents a guess at a cryptographic string. On proof-of-work blockchain networks like Bitcoin, the miner that correctly guesses it wins the right to verify a block worth of transactions and receives a reward. 1 exahash represents 1 quintillion such guesses and requires a lot of power. Washington's share of U.S. hash rate isn't the biggest by a long shot. Georgia accounts for 31%, Texas and Kentucky for 11% each, and New York generates 10%. I had no idea Georgia was 31%. Although that could change if New York Governor Kathy Hochul signs a 2-year crypto mining moratorium into law. She's expected to veto or sign the bill next week. Last year, publicly traded Canadian Bitcoin miner Bitfarms acquired a 24 megawatt Washington facility that's powered by the Grant County Public Utility District. The facility generates 17% of the power required to run Bitfarms' entire 3.4 exahash operation, which includes Quebec, Canada, and Paraguay. Oh, but now there's been some pushback. KPQ also reported that nearby Douglas County has stopped allowing new Bitcoin miners to set up operations there because they already consume 25% of the county's available energy. Still, the Chelan County rate hike won't ban crypto miners. For companies that have made substantial investments in their mining facilities, officials have approved transition plans to gradually increase energy rates over the next 2 years. Quote, we need to have some sort of transition that's important for business, end quote. PUD Commissioner Ann Congdon told, I don't know how to pronounce any of these, Wenatchee there we go, World on Tuesday. I understand how the business need that in order to plan. Even with transition plans in place, there has been criticism from the crypto industry. Malachi, CEO of Salcedo Enterprises, told the local news outlet that the new rate would force him to reconfigure his 3 Chelan County crypto mining facilities into data farms. He has 4 other crypto mining facilities, 2 in Douglas County and 2 in Grant County. Under the new pricing plan, he can keep his Chelan facility on lower high-density energy rate if he processes data instead of mining crypto. The data processing uses the same amount of power as crypto mining, he told Wenatchee World. So, I mean, like I said, this is really hilarious because he's going to consume the same amount of power, but all he's doing now is like basically a data center. You cannot tell me that that makes any sense whatsoever. It just doesn't make any sense. Bad move over there in Washington. Bad moves all around. I'm hearing reports that we have a decision to delay the difficulty bomb. Is that correct? Yep. So it sounds like they're going to delay the bomb to the last Wednesday in June. Okay. So they're going to reset the bomb potentially right now. Breaking news. That's what I'm hearing. Difficulty bomb delay. I do have a meeting coming up here, but we have like we have one more article to cover. We'll skip mining profitability for the day probably. And then we'll see if we get confirmation on this specifically. So that does mean that we have potential profitability or revenue going up on Ethereum mining, that would start. It sounds like to me they would delay the bomb the last Wednesday in June. And then how long they delay it, I don't know if it'll be a delay or a reset, right? So we'll try to figure that out. The call's going on right now. Obviously, I'll have to hop on that today and get a video out. Bitcoin is squeezing its miners this month as suppressed prices threaten to impact profitability. The latest data shows both narrowing profit margins and miners waiting longer to recoup their initial investment. While Bitcoin miners have largely held off on major distribution as Bitcoin USD descends from all-time highs, the picture now appears precarious. Calculations from on-chain analytics platform Crypto Quant reveal that miners' production price, how much it costs to mine a single Bitcoin, could be right where the current spot price resides. While raw costs may be around $22,000 per Bitcoin for miners in North America, which is home to the lion's share of hashing power, additional costs could put the total at more like $30,000. We estimate cost basis for Bitcoin miners in North America around $22K per Bitcoin mined. This estimate includes the direct cost of mining and S&A expenses. This is really interesting because this is where I would expect the crypto or Bitcoin to fall back down to. Like I said before, around $21,000. $22,000 is what it's costing US miners to mine a Bitcoin or mint a Bitcoin. So this would be the bottom floor. And miners really influence that bottom floor. It's something that I try to explain to people all the time when they start saying, miners don't matter. It's like, well, if miners don't matter, then why is the entire super cycle based around the amount of Bitcoin minted newly having every single time? Why is it every single time? That is the number one influence for a bull run cycle. You explain that to me, and then you can tell me that mining doesn't matter. So if we look at what it is costing Bitcoin miners in North America to basically operate, and that's $22,000 to mine a Bitcoin, then that would be our theoretical bottom. It means that once you liquidate everything from the holders in Bitcoin, you still have a base bottom of how much it's costing them to mine a Bitcoin, which is $22,000. Pretty easy. When that gets cut in half, that baseline goes up in 2024 to 44,000 potentially, right? So depending on prices of power as well. So that is something to take into account as that increases over the next little bit. This estimate includes the direct cost of mining and S&A expenses. It does not include depreciation and amortization charges. There we go. Crypto Quant senior analyst Julio Moreno confirmed to CoinGraph in private comments. If you account for those, then the cost basis for mining Bitcoin is around $30K, which makes a ton of sense because where are we sitting at $30K? So if you include all costs surrounding Bitcoin mining, what is the bottom? $30K, bro. So we're at bottom. Fears of capitulation event among miners should spot price deteriorate remaining a talking point. So far, however, only the May dip below 24,000 saw a noticeable reaction from the mining community. Our data shows increasing Bitcoin flows from miners to exchanges during March 2022 and then a sharp spike in flows during the first week of May. This is aligned with Bitcoin selling reported by some mining companies in Q1 of 2022, Moreno added. In January, miners production costs appeared to be around $34,000, separate data showed. Continuing mining firm Luxor's hash rate index metric produced more interesting insights. The index, which shows the current price in United States dollar per terahashes, according to ASIC miner efficiency, confirms that the cost area has been decreasing incrementally since December of 2021. At the same time, findings by Twitter user XBT James shows the time taken for the average participant to enter profit by seeing a return on investment is expanding. Time to ROI has been increasing steadily since the China banned ASIC fire sale last year. While USD pricing on ASICs have come down, the sell-off in Bitcoin and increase in difficulty have combined to severely impact mining profitability, the account explained in a series of tweets. XBT James added that higher Bitcoin prices would be needed to reduce the pain for miners, including new market players and those looking to expand their hashing capabilities. And this is all what we know. What we find out, what we learn from this, obviously, is that base price of $22K just in like power costs and S&A. That is the bottom barrel. That is where the miners will set the bottom of Bitcoin. And it would work out to be exactly what you would expect for a super cycle. Meaning that usually what we see is an increase of something like, 300% from the previous all-time high, 21,000 to 69,000. And before it was the same thing. And then a dip back down to previous all-time highs. So the previous all-time high was around 21K. So we would be around 21K for the bottom out here. Now, obviously, things are changing and there are additional factors to take into place, and the industry is getting more mature at calculating their overall costs, and you have more depreciation and so on that is taking place, which is pumping up, of course, this bottom to about 30K. So it makes a lot of sense, and we learn a lot from that, in my opinion. Now, I got to get going for a meeting, unfortunately. I do have my easel pool pulled up here if you guys want to take a look at it. I shut a rig off. We're at 4.67 gigahash. Our 3-hour average is 4.6, and our 24-hour average is 4.28. It's extremely hot. I'm proud to even keep all this online. Hopefully, we'll be getting it even better. It's only resulting in $100 a day, which is extremely difficult to maintain with the rent. We've talked about this, but we'll talk about it in more detail another time. If we took a look at adjusted RTX 3090, Zero is still at the top at $271 a day in revenue, $1.92 after power, with Ethereum at $254 a day in revenue, $1.77 after power. Quick note about that is it is sounding like we are getting a difficulty bomb delay. And that means that the profitability in Ethereum will be going up. The revenue will be going up as soon as they basically defuse the bomb and then set it for a new date. Now, if they decide to just reset it, then we're just back at basically... We're going to be back at earning the same Ethereum that we were earning before the bomb went off. So as you guys know, the bomb's been going off and the difficulty has been increasing. And what that means for miners, obviously, because like at this time we're at an all-time high of difficulty at 15.15, we should drop back down into the 14s, right? So we should have a pretty decent decrease in difficulty. I do not foresee any hash rate surging on the network due to this. So that means that luckily for you and for all of us, we'll get a little bit of a reprieve. We'll get a little bit of breathing room. We'll be able to start making hopefully some better plans. It'll come at a great time because obviously summer is going to be killing everybody from a temperature standpoint. So, you know, it is welcome, I think, from my perspective, and I'll get more details and we'll make a video this evening. I would love to answer questions. I just don't have time. I am going to catch this super chat real quick from Ursus. And then I got a meeting that I got to hop off to. But $10 super chat from Ursus. Thank you so much. The super chats help a ton. The super stickers are amazing. I really appreciate it. You guys are keeping the channel alive. He said, have you mined on EVGA XC3 3080 Ti? I have two that hit 108 mega hash NB miner, no higher core clock, stops at 930, memory speed no change, get 120 mega hash on the For the Win 3. Advice and thoughts. Advice and thoughts would be more than likely, obviously, the memory is thermal throttling on the XC3s. I don't have an XC3. I do have For the Win 3s. But, you know, anytime you see basically if you're running the same GPU type on the same miner or whatever, and you have a lower hash rate on one, more than likely what's happening is that you're thermal throttling on the other ones. So that's typically what happens, which means you need to get in there and replace the thermal pads. It's always the pad, bro, as we say on the channel. Now, due to the cooler design, right, the For the Win 3, I believe, has basically an extended plate surrounding the core that cools the memory modules. You could have separate aluminum on that lower end one, and that is why it's not getting as good cooling as the higher end For the Win 3. And in that case, you could try, I mean, obviously, like I kind of advise against copper shims, but obviously that's one way to do it. And then the other way is to just get the best thermal pads with the highest thermal dissipation that you can possibly get and try those out. Thanks for watching, everybody. Be sure to hit the like, comment, subscribe, and notification bell down below. I'm going to run the ad one more time, and then we're going to get out of here. I hope you guys have a great Friday. We have a new video coming out tomorrow at 9:45 a.m. Central Time, so tune back in for that. And thank you all for the support. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research.